Pullbacks are the number one friend of a trend trader or a momentum trader. We know that we do not want to chase a market under any circumstances, no matter how strong we think it is. It's just a bad habit. Even if you say, well, there's some exceptions when the market's really, really strong and it's really, really aggressive, I can get involved in it. Yes, you know what? There are times when chasing, you get away with it. But honestly, it is a bad habit. The best thing you can do is to say, you know what? I've identified strength. I want to get involved, but I'm going to wait for a pullback or a flag or some kind of unwinding. In the day, you know, price volatility and volume moves in stretches. It stretches and it unwinds. That may well be just a time unwinding. In other words, you're flagging at highs. I know that's a really extreme example that I've drawn, but that may well be letting time do the unwinding. It may well be price unwinding. You know, anything that just gives the thing a breather. Markets will very rarely just go in a straight line. Yes, of course, surprise news comes out and you get these scenarios. You get things like the flash crash, you get surprise positive news, and you know, they do move. But even those will pull back at some time. And the very worst thing you can do as a trader is to start chasing highs and getting caught in a pullback. Or the very worst is you're caught. The pullback is coming down, you're taking heat, you're like, you know, it's right on the edge of my stop, but actually you end up getting stopped out at a point where you really want to be getting involved in it. You're the one causing that little flurry that most good traders are waiting for to get back involved long. So pullbacks are a trader's best friend. And I've scrolled back literally a few days. Again, I really do not like cherry picking. This is why I find the first reasonable chart that I can when I want to talk about something. And if it doesn't fit, it doesn't fit. That's the way of the market. There's no point in curve fitting things, because ultimately when you're reviewing your own trades, and you should be obviously screenshotting your charts and doing all that kind of stuff, when you're reviewing your own trades, when you're looking for new setups, new scenarios, if you're only looking at the very best, it's not the real world. And then when you see this kind of mixed setup, then you go, you know, how do I trade it? And you get confused and you end up doing the wrong thing. So yeah, that's just my point on cherry picking. So look at this. This is a perfect example actually. It's not a crispy clean example, but it'll do. DAX, this is the open here on this dotted white line, 8 o'clock in the morning. We get a good drive higher. Now, what are the three phases of this kind of market that we see? Now, generally speaking, we're going to have, this is an intraday chart, by the way. This is a 1 minute intraday chart, but I'm only using this because it's visually easier to see. This applies on any time frame. If you're trading a daily chart, same thing. If you're trading a 15-minute chart, the same thing. Obviously, the time scale is going to be longer, but ultimately speaking, this is kind of what you get. Now, number one is you get on a trend move or momentum move, you get a shallow pullback. Number two is a deeper pullback, but still pushing on. And number three is kind of where you get that question mark, where it either attempts to push up high. So I'm going to say that's one, that's two, and three. This is one here, by the way, two, and this is three. The deeper pullback that either comes up and tags it, or then just fails and rolls over, or pushes higher. So those are three phases of pullback. So they're not all equal. It frustrates me a bit when I see people saying this is a pullback, this is what you should do. Yeah, but it doesn't really work. If you've had 1, 2 sharp pullbacks, you're on the third go and you're still trying to trade it the way that the price pattern you're looking for down here, that isn't going to work for you, because the probability, and just literally being in the game and trading for a while, you'll know this, is that doesn't happen. You know, and I'm saying it does happen from time to time, of course it does, but we're looking for the most likely scenario. And the most likely scenario is you do not get 3 tight pullbacks in a row like that. You get wider ones. So what am I talking about on this DAX trade? You've got the drive higher, you've got a pullback here. This is number one, so there's your shallowish pullback, and we'll talk about this in a second. We've got number two, so there's your drive to this is number two here, kind of this around this sort of level here, going to about here. And again, it is not perfect, guys, and by any means, but you could kind of see that that's two, or this whole section is number two. And then if we just drill out a little bit more, I would say that this is like the third zone. So let's pattern that a bit better. So there's your one, there's your two, and then there's your third drive. So there's your first pullback, your second pullback, and your third pullback. See the difference? Again, Not the best example, but we work with what we can see. Very tight pullback, not very aggressive. Down move. 2's a little bit longer. Generally speaking, this is a little bit deeper than you would expect, and 3's a lot slower and not a lot shallower. So, okay, we've got 3 phases of pullbacks. Again, broadly speaking, I really want to reiterate that because I don't want us to be taken literally for gospel each time. But broadly speaking, that's kind of what we get. Let's have a look now in the next video about how we can time our trade on each one of those pullbacks, whether we're trading on a day trading perspective or whether we're trading from a swing trading perspective.